Hey guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, I want to talk about Palantir, why I'm buying more of it. So I hope you guys enjoy it. If you have any questions, ask them down in the comments. And guys, make sure you guys smash that like button, subscribe to the channel, because at the end of the day, it really helps me out. So for those of you that don't know what Palantir is a company that was started in 2003, and it specializes in software and big data analytics. And the company's been growing at an astonishing rate. And it has a variety of contracts with the U.S. Army and a variety of other companies for hundreds of millions of dollars. And the beauty of this stock is it dabbles in virtually everything. So if we actually look at the revenue here, you can see we have a 35% increase, an 85% increase, a 47% increase. So the company is always bringing in money, which is absolutely fantastic. But one of the downsides of it is right now this stock is not profitable, right? It has a profit margin of negative 35%. We need a company that's profitable to keep this stock afloat for a long time. But hey, starting off, it's very, very common to see these stocks, not become profitable. It took Tesla over 11 years to become profitable. So with the company not being profitable, it's not that big of a deal. As long as we have, that long-term outlook. Palantir has about $2.5 billion in cash, which is quite a lot. And the last recorded long-term debt wasn't even $1 billion. It was actually $0.1 billion in long-term debt, or about $100 million. So the company has great cash on hand, very little long-term debt. And the beauty of this is we have these fantastic earnings. It's in a top growing sector of software and big data. In general, data is growing at an astonishing rate. Companies are willing to pay so much money for data, for advertising or for whatever reason. And looking at the stock here, this is going to be really one of the main reasons why I'm buying it. I've been buying this stock for quite a long time. My average share is about $11. But if we actually look at this stock here, you can see if we go out to the 3-year chart here, you can see the stock went from about $8.90, popped up to $45, sold off, and really hasn't done much. But if we actually draw out a trend line, we'll go to the year-to-date chart just to make it a little easier for you guys to see. If we draw this out, you can see it has this tendency to use this yellow line as support. So virtually it hits it, several times, boom, 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 and it gets buying pressure near and around there every single time. Not to mention when it becomes undervalued or near and around under 40 on the RSI, we have this tendency to see buying pressure step in. So if we look at it under 40, boom, we had that little spike up. Under 40, spike up, sells way off. Under 40, sells off, boom, boom. So anytime that we get major sell-off where it drops the RSI, we have this tendency to see buying pressure shortly after, especially when it's near and around this yellow line. So with it selling off, today it sold off not even 1%, but given that it sold off here quite a bit, just at about 14-15%, I'm buying more of this. I think this is a fair price to pick up this stock, especially with a solid earnings report that they released with great revenue. And not to mention, if a company does have a bad earnings, it's super common to see a company struggle for a quarter. If we got shaken out of a stock anytime a company had a bad earnings, you'd be constantly buying and selling. But as long as you have that long-term outlook, where I personally think Palantir is going to be a fantastic company to have, especially in your portfolio over the next couple of years, and a good strategy for Palantir would be dollar cost averaging. And what I'm doing is I'm continuing my dollar cost averaging, but since we had a sell-off of 15-16%, I'm doubling what I'm normally putting in, just because I understand that if we have this long-term outlook, this stock, when it continues to rally up here, and before we know it's at 30, 35, I'm going to be making a lot more money than if I would have just continued to slowly invest into it. Not to mention, another good idea would be using this right now as a possible swing trade, hopping in near and around that 200 moving average line, setting your stops under 20. So you're virtually risking, $2 to possibly make 9 if it comes up to previous resistance, or at least 7. So you're virtually risking $2 to make 7, which is a fantastic risk and reward. Not to mention again, this is a fantastic stock with great growth numbers in a awesome sector. With the metaverse being a very real possibility, I guarantee Palantir will have a little bit to add to that, and I think that it's going to be an absolute no-brainer investment. I would highly recommend picking up some shares, but overall, guys, it's still a risky stock, and yes, I would recommend keeping this under about 10 to 5% of your portfolio. And if what that means is if you have $100 in your portfolio right now, I wouldn't go more than $10 into this stock. The reason why is because you're going to be putting a lot of your eggs in one basket, and just the risk tolerance is very, very high. And especially that we've had just a lot of consolidation this past year, I do think we'll get some buying pressure stepping in, but it could be some time. So I'm super excited to see where this thing goes. And guys, I hope you guys enjoyed it. It's just a fun, quick episode. Remember to stay happy, stay positive, and stay safe. Take care.